And now we come to trade of the day, the highlights of this week's trades. This week we celebrate St. Patrick's Day. St. Patrick's Day remembers one of Ireland's patron saints, St. Patrick. It celebrates Irish culture. And no, for those of you that are wondering, St. Patrick's Day is not a public holiday. It was business as usual here in the United States. Also, this week we had the March equinox. The March equinox is the moment the sun crosses the celestial equator. Use this to the celestial equator, which is an imaginary line in the sky above the Earth's equator from south to north. From south to north. It only happens twice a year, one in March and one in September. I didn't know that, so I thought that was pretty interesting and cool. What an amazing world we live in, right? So much to discover and learn. Welcome to Trade of the Day, a weekly series coming to you every Saturday on Am the Trader. We'd love to know where in the world you're tuning in from, so post in the comments where you're watching or listening to from today. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everybody should have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go! Coming up this week, this is how you could have made 5% in the market. Taking one trade a week, using one model, risking no more than 2% of your equity, looking for 1 to 3 risk to reward, risking 2% to make 6%. We had a total of 3 trades this week for a potential return of 18%. But remember, we only need one trade to make 5%. Let's break down this week's trade. A reminder that this is not financial advice and that trading comes with real risk. But before we dive deep into the markets this week, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from 3 things: understanding the market and how it operates, having one trading model that has IBDA signatures, and 3, having a plan and process that you follow every single day. Successful trading, guys, is really boring. You're doing the same thing over and over and over again. This is the 3-step process I use to take trades weekly. Step 1 is the condition. This is based on a higher time frame directional bias. Step 2 is the stage. What steps up your trade? What does it actually looks like? Step 3, we have execution. Can you execute? Have your entry criteria been met? The most important step is step 2, the stage. Because once you understand where the market is going and you understand the setup, the entry is easy. If you understand price flows that occur around key highs and lows, then you will have everything you need for setups. That's a little nugget for you there, free of charge. Step 1, condition. Determine higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This week, we were expecting the weekly candle to expand higher. This doesn't mean that it has to close higher. As you can see, institutional order flow on the daily chart is bullish. Down closed candles are supporting price higher. Price is finding it easy to break highs, and it's not spending a long time below lows. And fair value gap bases are supporting price higher. So we're going into the market expecting this weekly candle here to expand higher. Stage 2. Step 2, the stage. What sets up the trade? What does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stalk setups on calendar days and after the news release. The optimal days and times to trade this week was on Tuesday, all sessions, Wednesday, the PM session, Thursday, all sessions, Friday, all sessions. Secondly, we look at what sets up the trade. What does it look like? This will be your model. Since we're expecting the weekly candle to predominantly expand higher, we went into the market hunting long formation. For our buy model, we want to see liquidity taken below a key low. Displacement higher causes a market structure shift. We wait for a short-term low to form in the market structure, and we set our limit on the short-term low. Stop loss at the swing low. It sounds complicated if you're hearing it for the first time, but it's really simple. You just need to keep showing up and keep showing up on the charts and look for it. Now let's see it in action this week. Tuesday, March 19th, we had the medium impact news at 8:30, so we're looking for a setup to form after the news release, okay? The setup can form prior to the news, but we're not looking to enter until after the news. So as you can see, we had a setup form in the launch session. Liquidity taken below a key low. Displacement higher causes a market structure shift. What do we wait for? We wait for a short-term low to form in the market structure. After the market structure shift has happened, we're waiting for a short-term low to form in market, and we had the short-term low right here. So our entry would be right here, stop loss here, and we're targeting 1 to 3, risking 2% per trade. Entry time was 12:11. We exit that trade at 12:30. Trade drawdown was 18 ticks. For total time in the trade was 19 minutes in this trade. So for an account size of, let's say, 100K, risking 2%, which is 2,000, you would have made 6,000 on this day. Then we had another trade of the day, Wednesday, 20th of March. If we had FOMC, interest rates stayed the same at 5.5. So FOMC, we're looking for a model to form after the news release. As you can see here, the setup formed prior to the news release, and our initial entry would not have been tagged anyway, nor would we begin in the trade because it's before the trade. I do have a re-entry model which formed right here, which gave me 1 to 3%, 1 to 3 that we're looking for, risking 2%. I'll go in this trade. I would have gotten this trade here at 2:34. Exit time would have been 2:55. Trade drawdown was 99 ticks. For a total time in the trade would have been 21 minutes. Another 6,000 if we're looking at 100K account, okay? I actually was able to get a quick 1 to 3 real life time right here on Trading View. Many of you saw on my Instagram and TikTok that my actual entry wasn't tagged, but I was able to get in on Trading View. We move. Anyway, that was the trade of the day on Wednesday. Another 6% bagged and tagged. Then Friday, last day of the trading week, we had a setup form news. We had 9 a.m. Fed chair. We don't really care what he's talking about. We're just looking for our setup to form. So we're waiting for our setup to form after 9. Here we had liquidity taken below a key low. Displacement higher causes a market structure shift. We wait for a short-term low to form in the market structure after the market structure shifts, after a high is taken. Here we had the short-term low form. Yeah, so your entry, we got in on, it was a lunch session trade. Your entry would be right in here at 12:36. Exiting the trade for 1 to 3 at 4 p.m. Trade drawdown was 13 ticks. Total time in this trade was 14 minutes, okay? Yes, another 6% bagged and tagged. Let's go. All right, that brings us to the end of the week. As you can see, this is the week, this is before and this is after. This is the weekly candle after the week close Friday. All right, so here remember we was anticipating the weekly candle to expand higher. It ended up closing higher this week, and that's what unfolded this week. This week, we showed you 3 opportunities that could have netted you at least 5% with 2% risk. If you had taken all 3 of these trades, we're looking at 18% for the week. Not bad for a week's work, right? But remember, we're only looking for 1 trade that will net us 5%, and we're done trading for the week. So far for the month of March, we would be up 18%, and our monthly goal really is 20%. This skill is not easy to master, but it's also not impossible. You only fail when you quit. If you found this information valuable, then please make sure to subscribe and turn on post notification if you haven't already. Thank you for watching and tuning in to Trade of the Day. See you all next Saturday, same time, same place. Happy hunting.